What's up, you guys? It's been a bit since we've done a Tesla update. And so in this video, we're going to go over Tesla. We're going to be talking about the daily chart, why I think Tesla has a really good chance of moving its way back up to 186 to maybe even $230. We're going to go over some trades that I actually closed on Tesla. Today was one of my best days that I've had all month and all year, closing out $28,000 in profits. And we're going to go over everything that I'm watching for the next couple of weeks. I'm also going to share with you my thoughts on SPY. We're going to look at AMD and a couple of other trades that I'm currently in. If you want to get access to all of my trades, go check us out on our Discord community. The link will be in the description. Let's get into the video. Now, today was a pretty slow day for the market overall. Like I said, I did end up making about $28,000 in realized profits. So this means everything is fully closed out. That doesn't mean that I'm carrying anything. Friday was a pretty bad day, closing out about $16,000 in losses, but because that is the third week of the month, that's usually when I close out most of my swing trades that are totally evaporated. Moving over to Tesla on the 1 hour, you're going to see that we currently have a bullish shark pattern that's setting up. A bullish shark pattern is a harmonic pattern. This is a mathematical pattern that shows itself, and traders like myself use these all of the time, but I've been messing with different settings over the past couple of weeks. I've really started messing with this over, I'd say, the past 7 days. If you look at all of my harmonic trades, I can actually filter those trades. You can see that so far in the past 7 to 8 days, we are up about $30,000. We've had one red day with just that strategy alone, and we've closed about $30,000 in profits. These are reversals. So this is trying to time the absolute bottom in a downtrend, right? Like we're trying to find on Tesla right here. And we're looking for not some massive full-on recovery. As we look at the bigger time frames and you see that this pattern is showing itself on the bigger time frames, that's when we could see this move back up. We're not looking for a trend change. I'm not so bullish on Tesla that I think, like we said, that the trend's going to reverse, but I do believe that there's a good chance that we come back up to test some of these levels. Now, if you look at the bottom left side of your screen, you're going to see traditionally back up to this T1 success rate, we have about an 84% success rating. That's very, very high. Now, you can see that we have a lot of these positions open. We have one here, another one here, and then this one here. So this target was up at 177.50. That has already been hit, but we don't care about it. However, if we go back and we just isolate these other shark harmonic patterns that we're setting up before we saw the other ones come in, you're going to notice where these other target levels are. There's one sitting up here at about $188. So we know, guys, that there's an 85% chance that we will push back up here. It doesn't mean that it has to happen, but still, we are traders that look at my win rate. 76%, right? But if we actually get rid of it and just look at my win rate this year, it's only 64. So imagine a 75, 80% win rate with a 1-to-1 risk versus reward ratio. So we know that we have right here is our first target. The second one has a target up here. If we continue to let this play out, you're going to see that the other harmonic patterns form, but we still have yet to taken this target back out. So I think that there's a pretty high chance that we're going to see Tesla move its way back up to $188, which is about another 14% move. Now, I sold cash secured puts on Tesla, which I ended up covering those today. I ended up day trading Tesla a couple of times today as well, but I have not opened up another big swing position on Tesla yet. I do actually have some April calls on Tesla at this moment, but I have not added to those just because, number one, we're still downtrending. That's the first thing. When you look at these returns, this is not just trying to time the bottom on Tesla. This is across, obviously, a ton of other stocks, a ton of different strategies, not this. So it's the biggest thing that I want you to understand. We're obviously not full porting everything. We're not doing stupid stuff when it comes to risk management. The reason that we like the way that Tesla's setting up right now is because it has a high success rating and the risk versus reward was pretty damn good. So I do think that over the next couple of weeks, we will probably see Tesla move its way back up to $188, $200, like we said, maybe even $230 potentially. Now, is there a chance that we come back down to fill this gap at 165 and make a lower low? Of course there is. We also have earnings coming up. So between then, deliveries numbers, earnings, there's a lot of things that can really screw this up. So that's why we're not throwing the kitchen sink at it. It's a good quality setup, and we're going to take it. Now we're moving over to TrendSpider, and what I really like about this trading platform is that I get to see multi-time frames. So we can look at a daily chart, which you'll see here on Tesla, and in the solid red lines and the solid green lines, those are our order blocks, but those are the order blocks for the daily chart. If you were to see dotted lines, as you can see here at $250 to $225, anything dotted is actually a weekly order block. And this is very, very important because I don't care too much about the weekly chart, but I do care about where those order blocks are. I want you to understand before we actually look at these order blocks is to understand at a very basic level what these order blocks are. A lot of people have this idea that there are live orders that are coming through, somewhat like unusual options flow, and what they're doing is they're pushing money into the market at that exact moment. And that's not the case. Let's just use this example here of Tesla back in December 28th, which is highlighted blue. You're going to see in my notes section, I'm going to draw this out because basically what happens is we have this massive downtrend, and the last impulse on that downtrend before we get a big move up, this area is known as the order block. Now, what you have to understand is it doesn't mean that there was some live order that hit. It just means that that was an institutional level that institutions are looking to purchase at. Now, you have to remember, if you are a large institution, you are not just going to hit the market button and buy $100, $200, $300 million worth of shares at whatever the hell price your broker is going to fill at. That would be absolutely ridiculous. We're talking about professionals here who are setting limit orders, and they will not buy at all unless it's in that price range. So as we said before, if we have price bouncing off of this level here, there's no way that this price is going to fully reverse and start moving its way back up until there's enough money built into that position. So if you're a hedge fund who has spent hundreds of millions of dollars looking to build out this position, and you have all of these orders set here, you're not going to just hit the market button like we've already said. We're going to wait until price comes back down into that level. Once price retraces back into that level, all of the orders that are still hopefully sitting here will be triggered, which is a good thing, and that will push price back up. If those orders are not triggered, meaning those orders are still not sitting there, then we're not going to see that move back up. That's when we break through the order block, and that's where we look to get out of our position for a loss. So I want you to understand that an order block is not some massive order that's just waiting in the wings. We hope it is, but it's basically an old institutional level that we think institutions are going to come back into. So when we see these big dotted ones, these are very important because those are major levels on the weekly chart. And we know that major institutions are going to trade those levels. So yes, Tesla has pulled back down into that 165 to 175 range, which is a bullish order block on the daily chart. You can see that back here. Now, if we actually go back through, you're going to see that the massive weekly order block goes from 150 all the way down to $110. So yeah, there's a chance that we can come back down into this weekly order block, but like we said, short term, I think that Tesla's going to bounce. Now, as far as the rest of the market, I mean, 500 is still going straight up. We're still holding this trend level. I don't think that we're going to continue to go up much, much longer. I'm expecting maybe $530, but there's no reason to be going short. There isn't, right? I'm somebody who very rarely tries to time the top. I timed the top on SMCI a couple of times. That worked out well. But really, it's very rare for me to want to come in here and try to short the market. For instance, let's just even look at AMD. This is a position I called out on X, which if you guys are not following me on X, you need to be, because I called this out. A lot of my trades I throw over there for free as well. But this morning, it was a freaking no-brainer, right? I said this morning, AMD optimal trade entry, picked up 15 April 19th, $180 calls for $6.05 this morning. Target is $210 bearish order block. I believe we're going to retest that level, and then we will reject. So you can see, I made a short going over this last week, but AMD, even though it shouldn't be, is still in an uptrend. Yes, it has retraced. Yes, the past couple of weeks have been ugly, but we're still uptrending. And so this morning we were at our OTE, or optimal trade entry. And the way that we get that optimal trade entry is, first of all, by understanding that the trend, guys, is still up. Very important. Now, the second way that we get this trade entry is we look for most recent swing low that has not been taken out and most recent swing high that has not been taken out. So obviously the most recent swing high that we currently have at this point is going to be up here at about $227.48. Our most recent swing low that has not been taken out, it wouldn't be this one down here, it would be right here, is about 161.64. From this point, once we find our swing high and then we find our swing low, we're going to take our Fibonacci retracement level and we're basically going to draw from that swing high up to that swing low. So in this instance, we're going to start here and then we're going to draw our way up. Now, we don't care so much about the golden ratio because it means anything. What we're really looking for is this trend to continue up, but we don't want to buy in an overvalued zone. So in this, just, isolating this most recent move, you guys are going to see that this is not a good time to buy. This is called premium because we're in the very top. Discount zone is all the way down here, but let's just be honest, what's the chances of it actually pulling all the way back down? So instead, what we really want to buy at is somewhere in the middle, which is EQ or equilibrium. Now, I am not an SMC trader. I don't follow ICT. I don't really give a shit about any of that. I know that it's something that's like really cool to a lot of people right now and probably the hype train, and it probably works. But this is just what I've been taught like a decade ago, simply because obviously you want to trade the trend, but we don't want to be buying at the absolute highs. So this is why we wait for this retracement, which we see. The optimal trade entry is the 0.786, which is this level right here. And that was our optimal entry. So we're trading way below that. My entry was here at 173. If we come down to 169, we are freaking out. And then our take profit is back up at $210. Now, why is our take profit at $210 and not up at $226? The reason for that is there is a bearish order block. So like we said, in most cases, when price comes up, it's that bearish order block. We are going to come back down. And like we said before, we're still in this uptrend. So we're not expecting price, like break right through, of course. But what we're expecting to happen is to see price come back into this area, test the middle of this block, really, unfortunately, trick all of retail into thinking we're going to push a higher high, and then big money will probably slam it down and kill it, honestly. So my plan is to hopefully ride this bad boy back up to 210, short it at 210, and ride this thing back down. That's my goal. Will it happen? Who knows? Do I care if it happens? No. I'm just going to trade what's in front of me, and that's all that matters, right? Because we're not trading what should happen. We're not trading what could happen. We're not trading what we want to happen. We're trading what's in front of us each and every single day. And there will be days where we win. There will be days where we lose. There will be months where I look like a freaking jackass. Like, let's look at January, right? Let's just go back to all of January. If you followed me then, you thought I was a moron. I lost $34,000. If you followed me in February, you thought I was the freaking GOAT, making $138,000. And if you follow me in March, then you probably think I'm pretty cool as well. But at the end of the day, we're following the same stuff, the same strategy. Sometimes it works, sometimes it doesn't. It doesn't mean that you're a crappy trader if you lose money. It doesn't mean you're a crappy investor if you lose money. You should be okay with losing money, and you should get used to it. Guys, thanks for all the support. If you guys want to trade with me every single day, check out our Discord community. The link is in the description. To get access to all of our free resources, go to thtcommunity.com, and I'll see you guys next time. Peace.